Hey everyone, welcome back to Crypto Cash. Thank you so much for joining me here. I hope you're having an amazing day. We're taking a look here at PEPE, seeing what's going on. I got a request from one of my community members here, Joey. Thank you so much for requesting that I cover this. He's one of our newer members. Definitely welcome aboard. If you do want to become a better trader, though, perhaps you want to be part of something bigger with some trade signals and also my trading university. You can register, of course, link down below. We took some Blue Zell profits last week, 163%. That's the trade of the week. Took us 9 days to get that, and that was 5x leverage trade. More importantly, more relevant, if you will, to this week, we just took 20 hours. It took, 26% in 20 hours from our maker short. And of course, a nice little, ICP long here for about 12.2%. We're halfway to our second target. So again, thanks so much to Joey for requesting that I cover PEPE here. Really appreciate that. So what we want to do here, kind of as a starting point, because I get this question a lot, how do we draw a Fibonacci retracement? Well, we take the most recent low, the most recent high. In other words, this is the most recent low. You exclude that significant move up, right? So in this time frame of this range, we want to take that most recent low, the most recent high. And what we're going to do is we're going to talk about, Elliott wave, as well as a few other factors here. Because my speculation is that the price is moving upwards in an ascending pattern. We're likely to see a correction down the 0.618, 0.5 level, and then the next leg up would come from there. Okay, so that's basically kind of how Elliott wave looks and reacts. I'll explain more about that here in a minute, but we do want to kind of factor that in. We also want to recognize that we had hit our lowest point here, roughly about, I'm going to paraphrase here because it's a little easier. I'm going to say 60,000. So 60,000 is essentially the best place to recognize that that is the lowest point in which the price went recently. We had this descending trend that was eventually broken, and we established higher highs here by breaking this most recent high with this high here. Okay, so what's cool about that, that's kind of identifies and tells us that we have broken this descending trend. Because every time you see the price come down, it hasn't done that yet. So this is a good step right here. It really much tells us that our bottom is in at roughly about 69,000. And then furthermore, what we also want to look at is a few other key factors here. We're back up over 50 on the RSI, and we haven't been for a long, long time. So this level at 50 is an important level. Now that we're above that, we can presume that the price action will continue to ascend. It doesn't mean it's going to just shoot up here from now, but it does imply that we're mostly bullish. And instead of being on the wrong side of the tracks, we're kind of on the right side. Even on track with that example, right? You see the 20-day SMA working concurrent with the descending trend. It's a very common characteristic. So hypothetically, the 20-day SMA will work ascendingly with our trend line here. Okay? So we're going to pay attention to that in the near future, but it is important to recognize the 50-day SMA is working its way down, potentially going to become a resistance if the price comes up to that level. It does look like it's an inevitability at this point, with the way that it's trending upwards. And we can kind of see here as well, we have a nice little ascending trend here running concurrent with this ascending type of pattern. And what I mean by that is if we take a look at the 20-day SMA on the 4-hour, we'll see the exact same thing. See this ascending trend working positively here for us, basically letting us know that we're on the right side of the tracks. Okay. Once again, another positive affirmation. So we're kind of adding to the equation here that there's more good than bad in this scenario, or in this regard, that the price is going to be more likely to increase than decrease. Okay. And again, that's what technical analysis is. It's really just kind of building a case on which direction it could potentially go based on contributing factors. That's what we're looking at. So in that sense, where are we at right now? Well, we are overextended up to 70 on the RSI. We're really close to that. Keep in mind, money flow index is fairly high. That's a good thing. In order for the price to maintain its current level, we need to see the MFI staying high. We also want to look at the volume here at this range and kind of see if we have any support. We have tentative support based on previous resistance here. So if we kind of take a look here, the volume is kind of all over the place. It's accumulating in specific ranges. But as we can kind of see right here, the largest amount of volume accumulation is right where the current price point is at. They're at about 79,000, maybe 80,000 if you round up a little bit. Okay. So what does that mean for us? Well, it just implies that the price action has more potential to maintain its current level than decrease. In fact, we do have a type of pattern here that kind of shows that we might see a breakout to the upside, which is a bullish type of flag and or pendant pattern. And then, of course, we also want to recognize, too, that the convergence here is still converging. Okay, so we haven't lost that momentum yet. It is starting to subside. My speculation is that we will get a correction in the relative near future. Once again, as I mentioned before, based on the Elliott wave, we should see the price come down to bounce off of 0.5, 0.618, or 0.382. Let's take a look at that now and kind of see what this tells us here. Kind of as I expected. Let's see. Let's pull this out. Just get rid of some of these extra indicators so you can see a little clearer. What this does is basically tells us that we have 2 higher highs, right? And we have 1 higher low so far. So our second higher low is going to come somewhere in the range of 0.382, 0.5, or 0.618. Those are really common retracement ranges. And what Elliott wave is nice about is it tells you when you have reached an overextended state. And with us hitting a 3, basically our second higher high, we don't have any potential for the price to necessarily, if the price does pull back, we have greater potential for the price to pull back to this range and bounce off of one of these levels here. Okay, and again, the reason why is this is a most recent high. It's exactly why 0.5 will be a strong support level if it pull back to that level. My speculation is the 0.382, where the price wick down here already, might have been the bottom, at least the most recent relevant bottom, and we may actually be on our way up now. Smaller time frames might identify that, but generally speaking, at this point, it's best to presume and to wait, in my personal opinion, to try to find a good entry at these levels instead of getting in when it's up right now. We don't know if it's going to break. Truth is, we're overextended, and a lot of times when you buy at the top, the price comes right back down. Tell me how many times, comment below if you've bought the top and you've actually gotten your ass handed to you. Whatever, I laugh because it's happened plenty of times to myself, so please understand that. 20 years of trading, I've seen pretty much everything. Okay, so let's talk about the hourly here and just kind of wrap this up. To summarize and make it easy, we're not overextended on the hourly right now, which is nice. We are, however, getting close to the cloud, and our lagging span's soon to intersect with the price action. And you may not know what that means, but what it really implies here, and the great thing about the Ichimoku cloud, is it tells us if we have run our course with this overextension. And we're getting close. So bottom line is that unless the price shoots straight up from here, we're going to intersect, and that's basically a case in point where you might want to consider taking some profit. Okay? So if I was in a long trade right now, I would trim 60-70% of my overall position size. I would potentially add to my position as the price comes down to these 0.5, 0.382 Fibonacci levels. Okay, now I'm going to send out a playout chart. Keep in mind, I do send this out frequently, where I have specific chart patterns and things that I like to identify when I send those out on my Telegram, Twitter, and of course my Discord as well. So if you're part of my Discord, you can find that in the playout charts section. But generally speaking, the whole point of me sending those out is to kind of paraphrase what you're seeing here too, as well as kind of some bullet points, so you kind of know what that looks like. But to clarify, 0.618 is 72,000, 74,000, or 76,000. So really easy numbers to remember: 72, 74, 76. Those are kind of the round numbers we're going to be looking for entry. Okay? Again, I'll highlight that on our social media there. Last but not least, we can maybe take a quick peek at the CC Golden indicator on the 15. It does give us an indication here, of course, recently to have sold the top there. This indicator is available on our webpage if you're interested, but the bottom line is it's really good at identifying entry points and exit points. So basically buy low, sell high, buy low, sell high, buy low, sell high. Okay, so that's kind of the concept. And right now we have a buy low indication, which really implies that we shouldn't close our position. Again, if you're going to trim your position, it wouldn't be the worst thing ever, but there's a great chance we could very well see the price continue higher from here based on this indicator kind of giving us a green light to leave your position open. Okay, so again, at this point, my speculation is if the price doesn't break this level here at 82,500, it's going to correct itself, come back down to these levels here, the 0.382, 0.5, or 0.618. So my speculation is we're going to see the range of 74 to 76,000 retested in the relative near future, and then we'll go ahead and get that bounce off of that. It'd be perfect to get this 0.382 bounce, because then we'd be ascending positively off that trend line. Okay, so that's kind of what we're looking at there. I hope this was descriptive enough for you. Thanks again, Joey, if I'm saying it correctly, for requesting that I cover this, take a look. And of course, if anyone else is watching and you're part of our Discord, jump on in there. Let me know if you have anything else you want me to go ahead and review. We do have a request section. Future reference is where you can kind of put in all your requests. And if you have other speculation, go ahead and jump on over to Twitter and Telegram and let us know your thoughts. All right, well, I hope you have a good rest of your day. If you're not currently a community member, again, consider joining CryptoCash.tech, and we can go ahead and join in together and conquer the world, or whatever you want. Conquer the trading crypto world. It's all about survival. That's the key takeaway. One last thing to note is make sure you're using low leverage, low position sizing when you're trading coins like these, specifically coins like this, mainly because you can get wrecked really fast. We use 5 to 10x leverage tops just to make sure that we're not hitting our liquidation levels anytime. Okay? It's less common for that to occur. All right, friendly advice noted. Thanks again for joining me here. Have a great rest of your day. We'll see you in the next one.